Good morning, this is Bill Biederman with the opening commodity comments from the Allendale trading desk. It's April 20th. Not a real big news day today and kind of a consolidation after yesterday's wild day. But today the dollar is down about 5 at 81.06, has support in the 80.80 area and resistance at 81.40. So pretty wide range there. But the euro uncertainty continues to provide support on the breaks, while the Goldman Sachs fraud investigation continues to provide resistance and would be a bearish impact as we open Pandora's box. Goldman Sachs today did not help the news at all by reporting first quarter profits at $3.3 billion above expectations. Over in the crude oil market, that's 72 higher after the last few days a collapse in prices from roughly 87 down to 82. We're currently at 83.85. The euro air travel has picked up, and that's helping the demand argument a little bit, with about 50% of capacity in travel in Europe today as the volcano and ash plume subsides. The big picture, though, is we see inflation buying come in and support the crude oil on breaks down in the 79 to 80 cent range, and large stocks, as production exceeds demand, provides resistance up at the $87 range. So basically a trading range for now. Corn market, the USDA reported 19% of the corn is planted, versus 9% normal at this time, so well ahead and very close to the record of 20% in 2004 when we had a record yield. So typically early plantings do equate to yields that exceed trend. Reality is, though, that planting is probably closer to 50% done than the 19 reported. And many producers are already finished planting corn, and a lot of corn is now coming up out of the ground. So corn was down 16 cents yesterday with good field work and weather. But this good field work and weather has prevented a lot of movement, and so the cash market is actually firming up. It's about 2 to 3 cents higher. We're seeing spreads narrow, and in fact we're seeing some cancellations of deliverable supplies out of warehouses at the CME, and that's due to the tight farmer selling. On rallies, though, we do expect farmer selling to pick up as their good field conditions suggest that they'll have good crops. Long-term fundamentals could be changing because early plantings do mean higher trend yields, and if that happens, we could be looking at a 2 billion bushel carryover at the end of the year, but it's a long growing season ahead of us. In the beans, China rolled about 165,000 tons of beans yesterday from old crop into new crop, canceling some old crop demand, yet the market's held real well, and this was interpreted as bullish. Fund buying continues, and they are getting pretty close to their $60,000 contract capacity, so we'll see if there's a lot of follow-through buying up at these levels. Argentine farmers continue to threaten about a strike, and that suggests, or at least the hopes, that there could be some sales shifted to the U.S. Short term, this is providing a bounce, and we expect the rumors of demand to continue to provide support to the market. Stocks could be lowered if that happens, down to 170 million bushels versus 190 million bushels currently projected. However, that's not a shortage, and long-term U.S. stocks are expected to increase this year with a new crop coming on between 57 and 71% increase over year-end levels. That would project new crop stocks up around 320 million bushels. World stocks are also expected to increase 47% to an all-time record. Therefore, our long-term price forecast remains bearish. In the wheat market today, Russia sold yesterday actually about 300,000 tons. Iran announced that they're going to be exporting 2 million metric tons. So a lot of competition for the world markets pushed that wheat down very hard yesterday. Today we're bouncing just a little bit as we had a turnaround Tuesday. But the U.S. price is still about 20 cents higher than the world market, and therefore we just can't sell wheat. About the only wheat we see being sold out of the U.S. is either routine business or donations. Right now, the Kansas City seems to be undervalued relative to Chicago. We are buying some Kansas City wheat. We are selling Chicago on rallies as two separate trades, but certainly a good trade to pursue. And then we're doing some options over there. In the cattle market today, wholesale beef is up about 20 cents. June cattle are called about 15 to 20 higher. They're in a trend. We have support in a range between $92 and resistance up around 96. Japan did report a hoof and mouth case, and so therefore they suspended exports. And Friday we have a cattle on feed report. Over in the hog market, cutout was up 80 cents. June hogs are called about 15 higher on the day. We've got support at $84, resistance at 86. Our bias on the hog market is still to be trading from the long side. And that's it for today. If you have any questions, give us a call. It's 800-262-7538. Our website's allendale-inc.com. Make sure you go on there and get a free trial. Actually, better yet, we still have an annual new subscriber special for $250 for 13 months. That's a deal that you just won't be able to pass up. A lot of good information for $250, and that gets you for 13 months. That's a good deal. Go ahead and sign up at allendale-inc.com.